you agree the last financial year has been full of events? While we all started off on a very bad note with the second wave hitting us extremely ugly, we from there moved on and started showing a lot of recovery. The market, in fact, touched an all time high of 62,000 in October before falling off to 52,000, of course. Thanks to a lot of technology stocks in the US getting hit, newly listed Indian startups also had a big opening only to fall off the ground very badly. Today they are hitting the bottoms almost on an everyday basis. While in general the last financial year has been good for our investors, making anywhere between 15 to 18%, we made 3 mistakes. At the end of this video, you would learn our lesson from those 3 mistakes, which can help you in your investment management. Watch till the end. Let us now see those 3 mistakes and our learnings from those mistakes. The first and the most important mistake that we as an investment management firm made was playing the theme a little early. Let me explain. We were very bullish on banking and the credit uptake. We thought banks have hit the bottom and the way forward is going to be up. We never bothered too much about the momentum. When we saw that the price was stuck in a range, we never realized that for the theme to play, there has to be a certain momentum in the stocks, which was lacking. The second and the other mistake that we made was instead of playing the theme directly, we played the proxy theme. Let me explain. Let's say I'm bullish on gold. Instead of buying gold, I ended up buying gold mining companies. I thought there will be 2 benefits to it. One, when the gold price goes up, the realization will be better. 2, because they are lowly valued even today, the PEs were very low and it was attractive, and that can lead to the double benefit of PE re-rating too. While the analysis more or less came correct, I thought at the end of the day, it is better to play the theme directly and not via subs. And the third and the largest mistake that I made in the last 1 year is that I added a lot of new registered investment advisors because clients wanted to invest in stocks. And as you know, we are distributors and investment managers. We don't invest in stock directly. So I had onboarded a few RIAs, registered investment advisors, who helped my set of investors to invest directly into stocks. While what I realized was everyone talks long term, the execution was purely short term. I mean, who actually balances the portfolio every month? It adds to a lot of cost and transaction, and that is what few new RAs did. While their narrative was very different, the action turned out to be something which is against wealth creation. And this is one of my biggest mistakes in the last year. Okay, enough about mistakes. Let us see how the last year panned out to our investors. We have been extremely bullish about small caps. You can see my previous videos. You can see my Diwali video where we said small cap is the place to be. And fortunately for us, small caps added great alpha in the portfolio. Remember, the risk of investing in small caps at a certain point in time was lower than the risk of investing in large caps, and that's the reason why we went very aggressive on small cap, and that really paid us off very well. We have been continuously adding good growth and value stocks at a decent valuation. That has been our focus. While maybe the momentum is yet to pick up, we believe that earnings growth that a lot of good mutual funds are seeing is not reflecting the valuation, and that's what led us to believe that these are value stocks, and we kept adding those in the last year. We didn't fear the fall. We had invested a large chunk of money that I had kept aside for these kind of falls. We had invested in November. We had invested big when Russia attacked Ukraine. Guys, these are short-term moves. These should not really affect your long-term investment or wealth creation journey unless the dependency factor is huge. And therefore, we believe that the Russia-Ukraine situation or the November correction are great points for us to add a lot of money. Has led to good growth in our portfolios. Now, what are the lessons? Let me talk about those lessons in the next section. As I said, we played the theme a little early. I think you need to watch out for momentum. While you may feel that, okay, Housel is a great stock, but it's been beaten down very badly, let me go and buy it. My suggestion is, till the time the sector or the theme itself is showing some kind of a momentum, you should try and avoid that sector. Keep a very, very close eye on the sector. And the day you see that, okay, great, things are looking great, and the prices also moved up, that is when I think you should go into those sectors. Yes, you may end up paying a little higher price than what you would have generally paid if you bought it early, but the cost of delayed growth versus starting a little late is way too high, and therefore I prefer going forward stocks or funds or themes showing momentum before I go big on that particular theme. What we also learned is that while our allocation strategy was great, the fund managers actually couldn't deliver or even beat the benchmark. This is an increasing concern, to be honest. And that's the reason why now what we're trying to do is add passive funds, add index funds in those places where we think the value creation by the fund manager is almost zero. Why pay the fund manager when the index itself is expected to give you same or better return? And finally, what we realize is the markets always go through expensive and cheap cycle. When it is expensive, it is okay to delay your investments a bit. Keep aside some amount of money in cash or in liquid or in some kind of a debt fund. Markets always goes through ups and downs. Try to use some bit of downs to enter into the market. I know this may be called as timing the market. No, I'm not talking about timing the market. All I'm saying is if you're a little uncomfortable with the valuation, it is okay. Just set aside some portion into liquid, and during big falls, go big on that. For all you know, this will average out your overall cost. I hope you like the video. Please do let me know your feedback. That's very, very important for us. And do share it with your friends and family. Good luck and happy investing.